Good sand wedge away. Joining us in our closing bell exchange today, Kimberly Foss from Empyrean Wealth Management. Peter Anderson from Congress Asset Management's back with us. So is Kyle Harrington from Harrington Capital Management. Mark Martiak from Premier Wealth First Allied. And our own Rick Santelli joins us as well. Mark Martiak, are you concerned about Ukraine, the situation with Russia? Is it enough to make you want to rethink your growth portfolio right now?
It is on both counts, Bill and Kelly. Thanks for having me on your show, by the way. It is in the sense that we haven't seen the full effect of what sanctions are going to unfold from Washington. And in fact, with respect to Ukraine and Europe, one of their trading partners, Europe imports 30% of its natural gas from the Ukraine,
right.
from Russia. And we can have an issue there if Russia decides to cut off the supply to the Ukraine of natural gas. So, but I do think that investors and the markets have the drama now priced into them,
okay.
And I don't fear for investors as much at this point.
You know, Kyle, I wonder if this isn't one where consumers wind up taking it on the chin. If you look at the impact that we've seen throughout commodity markets and some of the softs, some of the grains in particular, is it too much to attribute that to what's happening in terms of this unrest, and to say that perhaps it won't be for months from now until the effect of that's really felt?
Well, you know, I still think that the effects are here to stay and are going to be felt in the coming months. I think that the volatility and the increased international disarray is going to drive volatility up and down in the domestic marketplace. I would just highlight, Kelly, that I think that if you're not allocated to some markets outside the United States, for example, in Indonesia, that over the last 6 or 7 years has grown at 5.8% GDP versus ours in the last 6 years growing at 1.2. You're making a mistake. So visit your portfolio with an international allocation.
Kyle? Would you buy Russia?
Well, Russia, I think that I'm going to sit back on Russia for a while. I want to see how this unfolds. I'm very cautious in that marketplace, and Vladimir Putin's, he makes me nervous.
Peter Anderson, as Kelly pointed out, we're only 5 points away from an all-time high on the S&P, but you've done the math. You went way back. You still think this is a cheap market here?
Well, I've done the math. That's right, Bill. And if you look back, I mean, what I like to do is be telescopic. Let's look really from a macro perspective, and then we can drill right down into the specifics at a stock level. And when you do that, everything seems to be pointing in the right direction. The lights are all green. So on the macro perspective, if you look back 65 years on the S&P 500 and you look to see where the valuations are, right now at around 17 or 18 times, we are not, and I think this is going to surprise a lot of viewers, we are not really overvalued.
In the end, we all know what's going on here. We have Janet Yellen continuing, quote-unquote, the taper. Why they need to continue to make any purchase whatsoever after listening to our guests makes no sense to me at all. I think the salient feature tomorrow will be why they don't want to pay attention to the unemployment rate anymore after all these years of telling us what wonderful news it was that it would move lower. It affected the outcome in the direction of the political landscape, but after tomorrow, it's probably not going to be as important. They'll switch gears to things like inflation, which the government measures. But yet anybody who has a hunger for three meals a day doesn't really jive with that anyway.
They measure both of them. So, I mean, if you're saying that we can't trust PPI, then we shouldn't trust any of the government data.
Wow, so we do agree on something, don't we?
What do you think, Rick, what do you think the market would do tomorrow if Janet Yellen said, okay, I'm done with tapering, no more asset purchases?
Well, gee, let me see. There might be some market volatility. Oh,
really?
My God. It's not pre-announced and everybody isn't in on the fix. I think it would be a wonderful thing for free markets, a great stride forward.
Kyle Harrington, I think you would agree.
I think I agree 100%. I think the less Janet Yellen's involved in the free markets, the process is going to expand, and I think it'll be much healthier long-term for the United States economy. I would agree 100%.
Bill, one of the things I think is pretty important to look at here, one of the things I think is important to look at here is, and nobody's mentioned this, but this is Janet Yellen's first official press conference. I know we've seen her in the past, and I'm really curious to see what her communication style is going to be. I don't know if everybody on this panel has actually watched her on camera.
Rick has watched her very carefully.
Okay, well, it is rather interesting the way she has answered some of these questions. So I'm going to be looking to see, regardless of whether or not she's going to be tapering. I mean, I know that's very important, but also I think the way in which she communicates this stuff can really send the market upside down, and she has to be extremely careful to continue that.
Wait, Peter,
policy.
what do you mean? Are you worried from the way in which she handled the testimony?
Well, I just tuned in on some excerpts, and I thought some of them were a little bit, I wanted to ask a couple of more questions. Of course, I wasn't there, but I think that there were some things that could have been answered a little bit more clearly, and I don't know if that's because of her academic background, and she tends to think more in more words than we normally do in markets here.
Okay, Peter, look, we got to go, but if you had one question for her tomorrow, then what would it be?
I think it would be, are you going to continue to give forward guidance the way your predecessor has, and are you aware of what kind of volatility that might cause in our markets?
Yeah. Those are good questions. I would ask Chairwoman Yellen when she expects to lower the short-term rate, if in fact 2015 is still in the future, to start lowering the short-term Fed funds rate.
You mean to raise?
To raise it, rather. To raise it, yes.
Yeah.
To raise it, yes.
That'd be an interesting...
Yeah, you gave Santelli agita there.
To raise it, yes.
All right, got to go at this point. And just remind everybody, Janet Yellen's news conference will be live here on CNBC tomorrow. So you can see that starting, I think, around 2:30 Eastern time.
Correct. Thanks, guys.